So, dear students, welcome back to Shasha's virtual classroom. So, now we'll work out one more practical exercise question from Catherine Kukom's book. So, this you can just go through this question. You can try answering yourself. Then you can cross check with the solution. So, on 1st July 20 dash 6, Mumtaz started a business. The following are her transactions for the first 2 weeks of trading. So Mumtaz paid capital 50,000 into the business bank account. So July 1st, Mumtaz paid capital 50,000 in the business bank account. So what is happening? Bank account asset is increasing and liability is also increasing. So when liability increases, we have to debit, we have to credit, and when asset also increases, we have to debit. When asset increases, we have to debit. When liability increases, we have to credit. Okay. So what is the entry? 50,000, right? So bank money is coming in banks. Bank account is debited. So bank asset is increasing. So that's why bank account is debited 50,000. So you are right for this 50,000. 50,000 bank account debit. Bank account is debited with 50,000 because it's increasing. So capital account is credited with 50,000 because it's increasing. Capital is increasing. Capital has increased. So that's why we write here. So now against this we have to write capital. Against this we have to write bank account. So the dates. So you remember and write the dates. So July 20-6. July. So important. Just write the dates over here also. Here also. 50,000. So bought premises 25,000 and paid by check. So 25,000 bought premises. Premises is a asset. So and it is paid by check. One asset is increasing, but the other asset is decreasing. So when one asset increases, you have to debit, and when the other asset decreases, you have to credit. So it is premises. Premises account is not there, so we have to prepare premises account. We'll leave some line for this because there are a lot of bank transactions. So premises will not write here. So we'll leave some space to write bank account because there are a lot of transactions. So business premises. Premises we can write. Premises we can write here. Premises account. So premises is increasing. So premises is increasing. It will come this side. What is the amount? 25,000. Money is bank balance is reducing. Asset is reducing. So bank account will be credited. So asset is reducing. Bank account is credited. Why? Because it is going into premises. So your the amount is being transferred to premises, that is paid for premises. So premises will increase. So premises will increase by 25,000. So please write the currency and date always. Don't forget to write. So against this you have to write bank. So through bank you have paid, you have purchased premises. So the premises has increased by 25,000. Next entry. Bought equipment 4,000 and paid by check. So again equipment is increasing by 4,000 and paid by check. Equipment 4,000. Four thousand. So equipment is increasing by 4,000. So how? It is paid by bank. So bank account. Bank account is credited. So asset is increasing. So it will be debited. So but other asset is decreasing now. So which is that other asset? Bank. So bank we have to write it as equipment 4,000. 4,000. So next, bought goods 1,500 on credit from Mayur Vihar Traders. So you have bought goods 1,500 on credit from Mayur Vihar Traders. When you buy goods, it's called purchases. So, but you have purchased on credit. Okay, so but you have purchased on credit. You have bought goods on credit from Mayur Vihar Traders. So you can debit goods or you can credit purchases. But since you are debiting, since you are purchasing the goods, it is better you write purchases, and purchases are expenses and they are always debited. And but you have bought it on credit from Mayur Traders, so you have to credit Mayur Traders because it's a liability. We have to pay later on. Purchases. Mayur Traders. What is the value? 1,500. 1,500. So date you have to write and it is Mayur Traders. 1,500. So since you have bought on credit, Mayur Traders will be credited because Mayur Traders have given the goods. So credit the giver. So 1,500. So purchases. So date. So you write the date and this. Next, advertisement. Advertisement. So advertisement is an expense. You are paid by check. Believe it's 60. So it's an expense. So you are paid by check. Bank account because money has gone out. Advertisement is a suspense, so it will be debited. Why? Because you have paid by check, so that's why bank account will come. So bank account will be credited by 60. Advertisement, because asset is coming down, asset that is bank balance is coming down, that's why it's 60. Advertising expenses 60 by check. Sold goods 200 and received check. So now it is a sale and you are receiving a check. So again it is a sale, so it's an income. So sold goods 200. So sales is an income. So incomes are always created. And you have received a check. Asset it is increasing. Asset is increasing. Bank balance is increasing. So it will be debited 200. So sales. So you can say cash sales or you can write sales also. So you write sales account. So sales is an income. So date dollars 200. So you have sold and immediately you have received cash. So you have sold and you immediately have received money. So bank account. Bank account. So sales. So you received a check. So when you receive asset will increase. So when you receive asset will increase. Sales 200. 200. So asset will increase. So don't forget to write the date. Dates are very important. And received a check. So done. Sold goods 310 on credit to Ridhima. So now again you are selling it to Ridhima and 310. So you are selling but you are not receiving cash. Okay. You are not receiving check. So but the amount is due. Sale is a sale. Whether you are it is credit sale or debit sale. Ridhima. Okay, so Ridhima account 310. So Ridhima is a customer, credit customer. So Ridhima has taken the goods. Debit the receiver. Ridhima has taken the goods. Debit the receiver. So 310. Why? Because of sales. So dollar date. So don't forget to write the date. So Ridhima account sales is an income, it will increase. So Ridhima is an asset, it will increase. So now Ridhima returned damaged goods 20. So Ridhima returned damaged goods 20. So it is a sales return. Ridhima returned damaged goods 20. 20. Return sales return. So sales return will be debited. Debited by 20 Ridhima. So what next? In the pay 1000 by check on account to Mayur Vihar Traders. So 1000 by check. So money bank balance is coming down. So Mayur Vihar Traders So we don't know why we are paying. So on account means ad hoc payment. So $1,000 we are paying. So Mayur we have to do this. So Mayur we have traders. So we are paying. So it will be debited because Mayur Vihar is the recipient. So 1,000 debit Mayur Vihar. So with bank, so 1,000 done. Enter these transactions in the ledger of Mumtaz, balance the bank account and the accounts of Mayur Vihar traders and Ridhima and bring down the balances on 15th July 26. Okay, so what we are supposed to do, balance the bank account and the accounts of Mayur Vihar traders. And this is books of Mumtaz. Okay, so we have to just prepare. We have to just balance the bank account and Mayur Vihar traders and redeem also three accounts. Okay, so when we come here, so you have to add up these. So this side it's 50,200, 50,200, and this side it's 29,000, 30,060. So 50,200 minus 30,060. 20,140. 20,140. 20,140 out right here. So what we have to do, we have to add all this. If you add all this, how much should we get? We get 25, 29, 30, 30,060. When you add all this, we get 30,060. So this minus 30,060 will give 20,140. So if you write this, both the sides will match 50,200. So this is called closing balance and this is called balancing of the account. So both the sides it should match. So this will become balance brought down. Balance brought down is the balance carried down for the last will become balance brought down. So it is a debit balance 20,140. Since the debit side is heavier, it's called debit balance and the balancing figure came this side. So this is called balance brought down. This is called balance carried down. This is called balance brought down. So now coming to Ridhima and Mayurya. Ridhima. So Ridhima it is 310 minus 20 is 290. 290 balance carried down. So when you add here, it is 310. So when you add here, it was 20. So this minus this will be this. So 310 minus 20 will be 290. So that is total. If you add both, it will become 310. So now Mayur we are traders date bank, so balance carried down. Simply because there is nothing here, it is 0. So balance carried down is 1000. So balance carried down is 1000. So this will become balance brought down. So this will become balance brought down 1000. Okay, so this is how it is. This is how you have to finish the question. So now it is almost done. So practice some more questions so that the concept is clear. So till then, good day.